So we are doing May June 2022, paper 22, and this is question number 3, which belongs to ratio analysis. Okay. Uh, we have been given the statement of financial position, and there are certain adjustments that is there for us, and we are asked to calculate some ratios. Are you with me?
Yeah.
Before you go to calculate any ratios, what do you think? What you should do?
Yeah. First, you'll have to find the credit sales and all the amounts first.
Use these adjustments and incorporate it.
Hmm.
Okay? Come
Yeah.
on. What are the ratios that we are asked to calculate? First, we are asked to calculate trade payables turnover ratio.
Yeah.
Second, we are asked to calculate trade receivables turnover ratio.
Hmm.
Next, what we are asked to calculate? Return on.
Return on capital employed.
And next, what we are asked to calculate?
Then net revenue or net book value of non-current asset.
We are asked to calculate
Non-current asset turnover.
non-current asset turnover ratio. Do you have the MS in front of you?
Yeah, it's with me.
Why?
Because I was opening the paper now first on my iPad.
Okay, so non-current asset turnover ratio.
Hmm.
Okay. Come on, can you give me the formula for trade payables turnover ratio?
Trade payables upon credit purchases into 365.
Upon credit purchases into 365. Trade receivable turnover ratio?
Trade receivables upon credit sales into 365.
Return on capital employed?
Profits from operations upon capital employed.
Okay, into 100.
100.
How do you get capital employed?
Non-current asset. No, non-current liabilities minus current asset. Non-current liabilities minus current asset.
What nonsense.
Yeah, that only, no?
Capital employed is the money that is used in the business.
Hmm.
Own or outsiders? Capital employed is what, darling?
It is the money that you use for the day-to-day expenses.
Yeah, so capital employed is the money that is used in the business, not day-to-day expenses. If it was
Okay.
day-to-day expenses, then it would be what? Working capital.
Oh yeah, working capital.
Okay, so what is the meaning of capital employment?
Capital employed is how much capital is in the business currently?
Money used in the business. So it is capital employed is your own funds plus your loan funds.
Okay, so your own funds plus your
Loan funds. So
okay.
whether it is your money or whether it is outsiders' money, you can, that is capital employed.
Okay.
Are you with me?
Yeah.
Okay, fine. So come on, tell me, capital employed will consist of what?
Your own funds and your loan funds.
Okay, fine. What does loan fund mean?
Like whatever amount you've
Plus non-current liabilities. Yeah?
Okay.
Are
Okay.
you with me?
Yeah.
Formula for non-current asset turnover ratio?
Non-current asset turnover ratio is non-current asset upon no revenue upon non-current asset value.
What does it show you?
I don't know.
Okay, it shows you how efficiently you use your non-current assets, how efficiently you use your non-current assets to generate revenue.
Okay.
Okay, are you with me?
Yeah.
Now let's move on. What does the first adjustment tell you?
Purchases for the year was 600,000, of which 80% were on credit.
Okay, so this will give us information for what?
For our trade payable turnover.
Credit purchases?
Yeah, so you'll do into 80%, which
Yeah,
is 480,000.
so you got your credit purchases, correct?
Yeah. Yeah.
Okay. Now come on. This one,
Credit sales were 30% of all sales.
do you have all
So
sales?
sales. No.
Okay, you don't have all sales. That means you have to find out revenue.
Hmm.
Whenever you have to find out revenue, you will do your income statement.
Hmm.
So revenue minus cost of sales gives you what?
Gross profit.
Gross profit. Okay. Okay, go ahead. Read the next.
Then the company had a gross profit margin of 40%. The company's gross profit for the year ended 31st December 2021 was 420,000.
Come on, tell me what will you do with this?
So gross profit is 420,000.
Hmm.
And if margin is 40%, which is 1 upon 4, markup will be 1 upon 3.
Why you want markup?
Then, oh, you need it. So if gross profit is 40%, then do we have the cost of sales with us? No,
No,
we
darling,
don't.
you want revenue, right?
Yeah, we want revenue.
What will be revenue? 40% on revenue,
Si-
right? If it's margin.
Yeah, so it'll be 60.
What you want? Profit or cost of revenue or cost of sales?
You want revenue, no?
Okay. Gross profit is margin or markup?
Gross profit is margin.
Margin. So that means gross
Hmm.
profit is 40. Margin is on.
Oh, margin is on sales.
So sales will be
100.
100. Are you with me?
Yeah.
Okay. Just give me a moment, okay? Calculate.
Hmm.
So come on, tell me if 420,000 represents 40, how much is 100?
105 and 4 zeros.
Sorry,
105 and 4 zeros.
you don't know how to say that.
Yeah, because there's so many zeros in it.
105,000,000.
0, 0. Yeah.
1,050,000.
Yeah. Oh, that I didn't know.
Okay, fine, no problem. Now, can you give me credit sales?
Mm. Yeah, we'll do 30% of that, which is 315,000.
Hmm?
315,000.
How much is credit sales? 315,000.
Hmm.
This information was for finding revenue.
Yeah.
Okay, come on. What
The
is it?
company's profit for the year was 182,000.
Okay.
No interest was charged on bank overdraft.
Okay. So when I want profit for the year,
Hmm.
okay, understand profit before interest and tax I want.
Okay.
Okay.
Yeah.
Minus interest, will give me profit for the year or profit before tax, right?
Yeah.
What is the profit for the year? What
What,
is the
Miss? I didn't understand. You're saying profit for the year is the profit before tax.
yeah, because PBIT minus interest will give you the profit for the year.
Okay.
Okay. So
So,
they have
so now we'll have to minus the interest.
darling, fill this.
Okay, so profit before in this was 182,000.
Profit before interest and tax or profit for the year?
Profit for the year.
This you should be very clear with.
Okay.
Okay. So profit for the year is how much?
182,000.
182,000. There is no interest on bank overdraft.
Hmm.
So that means on this bank overdraft there is no interest.
Okay.
Interest is there on this, na? That means,
Yeah.
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 So 250,000 into how much percent?
8%.
So
It is 20,000.
So can you give me PBIT?
Yeah. 162,000.
Oh my God, I don't know how to explain you. You want
What?
it?
Oh, I want that. Okay, wait, I got it.
You don't know what you want?
I got confused. It's 202,000. Wait, so PBIT is what? Can you say the full form of it?
Profit before interest and tax that you need for
Oh,
ROCE.
okay. And the last thing is profit for the year. Okay, got it.
You sure?
So this, yeah, so 200 this value that we found right now would be used for the ROCE.
How much?
202,000.
With me, right?
Yeah.
Revenue also we found out, na?
Hmm.
How much is the revenue?
105,000.
105 four zeros.
Yeah.
Okay, now I need trade payables, trade receivables, capital employed, and non-current assets at book value. Right?
Hmm.
What is my trade payables? I've incorporated all the adjustments.
Yeah.
Okay. Now come on, what is my
Yeah.
trade payables?
Trade payables is 42,000. 42,000.
Okay. Trade receivables,
Trade receivables is 30,000.
capital employed.
So it's
Capital
own
non-current
funds plus
liability.
loan funds.
So this is own funds.
Yeah.
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 How much is loan funds?
The debenture
Okay.
and
Capital
nothing else. No, only these two.
non-current liability. So it has to be capital plus non-current liabilities.
Okay.
Hmm?
Okay.
So how much does it come up to?
282.
1532 with trip
1532. Yeah.
and non-current asset at book value they've given you directly. Yes,
Yeah. 1520.
1520. Now I'm giving you 2 minutes time. Work out the ratios and give it to me.
Hmm.
So now can you give me the answers, please, for trade payable turnover ratio?
Yeah, so for trade payable turnover, it is 32 days,
Okay, trade receivable,
35 days,
return on capital employed.
13.19%.
What does the return on capital employed shows you?
I don't know.
It shows you how much profit you are earning out of the money that you are using.
Okay.
Hmm? Non-current asset turnover ratio,
0.69 times.
0.69 times. What is the next question of 3B?
Explain the importance of this non-current asset turnover to the directors of N Limited.
Okay, so first you will write what does the NCA shows you. What does
Okay.
it show you?
That the turnover happens 0.69
Efficiency.
times. Acha. How efficiently the asset is used to generate revenue.
And why is this ratio important? If there is a low ratio, that means you have to be concerned about future growth. That means you are not using your non-current assets properly to generate revenue. Okay? So, if you have a low non-current asset turnover ratio, you have to be concerned about your future growth. Okay, explain me one reason why shareholders will be interested in the financial statements of the company.
To see whether the company is making profits or no and whether they should invest more or no.
They want to see the profitability,
Hmm.
to see if they have to invest or to gauge or to see how much future dividends they will get. To see if their investments are secured
Hmm.
and to compare their own company with another. Yeah.
Yeah.
So this is, we complete question number 3, May June 22, paper 22, which is of ratio. Okay.